Gold investments, ABCDs, human psychology and investing. Just yesterday, April 22, 2025, gold prices closed above US dollar 3,500 per troy ounce. Here's a textbook example of gold bull market, which is raging like a wildfire and the price is almost reaching the sky exponentially. The sky-high prices and forthcoming relative world peace will deplete demand. Gold has entered the final mania phase after crossing stations named reasoning, enthusiasm, euphoria, greed, and delusion. Pretty soon, gold will exhaust itself and fall into a new bear market territory in short and intermediate time periods, inflicting many new and amateur global investors a lot of grief. Current bull market is maturing rapidly on excessive optimism and gold will lose its luster on euphoria. The current time of maximum optimism for gold may be the best time to sell to reduce positions. The upside potential may be 10 to 13% and downside risk may be 25 to 30% from the current levels in short to intermediate time frame. I like to be right, but I could be wrong. Humans have likely been drawn to gold's beauty since the discovery thousands of years ago. As early as 4000 BC, Eastern European cultures used gold to fashion decorative objects. The oldest gold artifacts are from Bulgaria. Gold was first smelted in ancient Egypt and considered a sacred material. It was used to adorn tombs, mummies, and funerary objects. Egypt established gold as the first official medium for international trade around 1500 BC. Gold has been widely used throughout the world as money, as a store of value, and to hedge against inflation and other economic and geopolitical disruptions since the dawn of humanity. Global central banks hold large reserves of gold, and individual investors invest in gold bars, coins, exchange traded funds. Bullion gold coins are better than gold bars and biscuits for investment holding purposes. Gold, the only yellow metal that does not rust or lose its shine. The World Gold Council and its members support responsible mining and trading. Gold fixing in London originated in 1999, which provides a daily benchmark price to the global gold industry. Some popular gold coins are minted by the following countries: South Africa mints Krugerrand, USA mints American Eagle, UK mints British Sovereign, Canada mints Maple Leaf, Australia mints Nugget and Kangaroo, Austria mints Vienna Philharmonic, and China mints Panda coins. Today, The largest gold depositories in the world are that of US Federal Reserve Bank in New York and US Bullion Depository at Fort Knox, Kentucky, USA. Fort Knox holds 147 million ounces of gold bullion, a little over half of the gold presently held by US Federal Reserve. Gold futures are traded on COMEX exchange in New York. India and China are some of the world's largest consumers of gold. The Dome of Rock in Jerusalem, the Sikh Golden Temple in Amritsar, Punjab, India, Wat Phra Q Emerald Buddha Temple in Bangkok, Thailand, and Svendagon Pagoda in Yangon, Myanmar are covered and decorated with gold and gold leaves. The consumption of gold produced in the world is about 50% in jewelry, 40% in investments, and 10% in industry. Gold is essential in various electronic devices, including computers, communications equipment, aerospace and dental applications, infrared shielding, gold leafing, and used as a catalyst in various industrial processes. Roughly one-fifth of gold today above the ground has come from South African mines. Of late, China, followed in order by Russia, Australia, Canada, United States, and Ghana, are the world's largest gold producers. Today, Indonesia has the largest gold mine. As of year 2020, a total of around 201,000 tons of gold existed above the ground. In today's gold price of US $3,500 per troy ounce, that may be worth US $2,265 billion or 2.5 trillion US dollars. I could be wrong in my mathematical calculations. Lately, gold mining output is declining. After World War II, gold was replaced by a system of nominally convertible currencies following the Bretton Woods system. Back in 1971, USA stopped backing US dollar with gold. Luckily, my wife and children are not crazy about gold jewelry. Thank God for that. Gold loses roughly half the value when jewelry is made out of it. We have never invested in rare coins. Ideally, gold should not be more than 3 to 5% of one's total assets. A thorough diversification into bonds, stocks, real estate, cash, and precious metals is a must for all the long-term investors. I do not understand Bitcoin as an investment. My disclosures: I have no conflicts of interest. I am neither a financial consultant nor have I any formal training in money and finance and investing. I'm just trying to share my hard-earned experiences emanating out of almost half a century of personal investing with the entire world. I'm only hoping that someone maybe benefit them somewhere. Read